Okay, a little bit about strategy, because you guys, today we'll choose teams and get you guys set up. So a couple things that you'll want to do today are finish up the assignments, hopefully. We can work on that in class, the situation analysis, the rehearsal. I think everybody's, well, maybe not. Has everybody done the introductory quiz? I can go check, but yeah, that part's pretty simple. So, but we want to get those things done, get you on the teams, and then as a team, you guys probably want to get together and decide what kind of strategy you want to pursue. The thing about strategy is, are you locked into that strategy for the whole period of like the practice rounds? Not necessarily. Okay, you could switch if you wanted. You got to inform me if you're going to switch. And then number two, do you have to use the same strategy in the competitive rounds that you used in the practice rounds? No, absolutely not there. You know, that'd be a perfect time to switch if you decided you didn't like the strategy or something like that, okay? And you might do the old, you know, the feint, right, where you try to make the other teams think you're going one way, and then come the competitive rounds, you do something completely different, right? You have to have a little more confidence in the game, you know, if you're going to do that, because you have to be sure that you know how to pursue each of those strategies. So again, I'll say, because I promised you, I'll say it 100 times during class, the team that most boldly pursues its strategy. Now, what's that mean? Does that mean going crazy? No. I often get students that ask me that. So, but you know, if you're a low-cost provider, there's certain things in the guide tells you that you ought to do as a low-cost provider, and if you do those kind of boldly, you will, in more cases than not, be successful, right? Same thing if you're going to be a differentiator, okay? The guide kind of gives you pretty good ideas, pretty dang straightforward, okay? As long as you're willing to read the guide and look at some of the little note things, you know, that pop up when you're making decisions and those types of things. So follow those. That's what I mean by bold, is doing the things. There's no place, for example, that says in the guide that if you're a low-cost producer that you should make 20,000 low-end units, right? Okay, is that being bold? No, that's being crazy. Okay, and so you got to weigh those things and do the things that mean being bold, but you also have to use some common sense. So, okay, a little bit about strategies, the different types. A little bit about strategy in itself. Okay, strategic plan might consist of those things, right? A strategy is generally a long-term, right? It's a long-term deal. I'll refer to tactics too, okay? And tactics are your short-term. That's your year-to-year or week-to-week types of decisions that you're going to make. Could your tactics veer from your strategy? Yeah, absolutely. There's going to be times, probably as the game wears on, usually not in the first few rounds, but as the game wears on, you might take a look and say, ooh, you know, all the other teams are doing this, you know, I have a real opportunity. Okay, if you're really paying attention and you're studying, I have a real opportunity here. It doesn't fit my strategy, but it's an opportunity. I'm going to take advantage of it. Okay, you're foolish if you don't, then in that case, right? And so tactics can sometimes veer from your strategy, but generally you want to be true to your strategy as you go along. Okay, where should it come? Michael Porter, I like to bring this up just because I like you guys to think about strategy, because I think strategic planning is a really important thing. I'd like folks throughout your life, you ought to be pursuing and looking at different people that write about strategy. Michael Porter is kind of considered the godfather of strategy. He teaches at Harvard, and he's kind of interesting. His books aren't, you know, strategy sometimes you might think it'd be kind of dull, but his books are kind of fun to read actually, and read through some of his stuff and whatnot. And so he's really good. He talks about it as a top-down view. He says you ought to have a leader that comes in and they present their strategy and they get everybody to buy in. Okay, now they're going to live or die by what they've chosen as a strategy. There's no question about that. Okay. And this other guy, and I don't know a lot about Eric Banabo, but he says strategy should emerge from the bottom up. So we should get ideas from the people on the front lines. Okay. I might argue that tactics would come more from the bottom up. You know, I might be more of a Michael Porter devotee, but that tactics should change. You know, as we learn things from our people on the front lines, because they're face to face with the customer, right? So we do want to keep them in mind when we're doing these things. Talks about the various time frames here, right? Your strategy is going to be your longer term. It says 3 to 5 years, 8 years is fine. Mission statement can be timeless, hopefully. What's a mission statement? You guys know an example? What's Nike's mission statement? Just do it, right? Just do it. It can be that simple in some cases, right? Okay, these things all work together. Here it gives us kind of 4 basic strategies. Again, I say there's 2 basic strategies. You can be a cost leader, you can be a differentiator. In our game, it allows us to further define those. And so you can be a differentiator in 3 different ways. You could either be a broad differentiator or a niche differentiator, or what they call a product life cycle differentiator. Same thing on the low cost, right? You might choose to be a niche low cost provider. If that's the case, as the game goes on, not necessarily in the first round or 2, but as the game goes on, you're going to be devoting your energies and money and investments to the low end traditional segments, right? If you're a niche low cost provider, okay? If you're a niche differentiator, as the game goes on, you're going to be devoting your energies, time, investment, and everything to the higher ends. Does that mean first round you get rid of the low end and the traditional? No, probably not. You might want to take advantage of those for a round or 2, make a little money, build a little cash, because you got those products anyhow. Okay, so you gotta work that into your strategy though. Maybe over 3 to 4 rounds, you kind of want to phase those out. You know, maybe you're reducing your capacity a little bit. You're phasing them out while you're building up your higher ends, right? Okay. The life cycle one just has to do with the fact that we've got moving targets here, right? We've got on our map there, our perceptual map, we've got these things moving along. And so life cycle, basically, if you're a low cost provider, what you're doing is you're introducing some new products, but you're letting your products drift. You know, as I say, the products themselves don't drift, but the map drifts into the products. So you're not having to spend a lot of money on research and development, right? Your traditional product eventually becomes a low-end product. Your high-end product eventually becomes a traditional product. And you introduce a new product in the high end that by the end of the game will probably end up in the traditional segment as well. Okay, and so you got to think ahead 2 or 3 rounds and where those products where they're going to be positioned. You know, they're gonna change in terms of their desirability by the customers, depending on where they're at on that perceptual map, and so you got to be cognizant of that when you're using that strategy. Okay, but it can certainly be a low cost strategy. That's on the differentiation side. That's the toughest one that I've seen executed. I haven't seen a team execute a differentiating life cycle strategy. Gonna give it a try? I hope so. Okay. Porter's theories talk about these things, right? Okay. ROI, we can have a high return on investment with a low market share, but a high, right? We have a high gross profit, basically, is what we're saying there. And on the other hand, we can have a high market share, but we might have a lower ROI, right? And we can still be successful. Can you think of some companies? Let's talk about retail. I mean, what's a company that's over here that has a real high market share, but probably a low gross profit or low return on investment? You guys think of one? Is there one that advertises that all the time? Walmart, yeah, Walmart. Okay, absolutely. Now, how about a company maybe in that same vein that has a higher ROI, a lot higher gross profit, but maybe doesn't have near the market share?
Luxury cars.
Maybe some luxury cars, sure. Yeah, luxury retail of any type, but cars, sure. Diamonds, whatever, right? Okay, a lot higher gross profit, but they don't have near the market share, right? I mean, Walmart sells about $400 to $500 billion worth of stuff every year. How much money does it make? In the end, I think it's only about 15 or $20 billion, which isn't a lot of money for that kind of sales, right? Okay, Microsoft has sales of about 70 billion, just to give you an idea, 75 billion, and it makes like $30 billion a year. Okay, so just they're 2 completely different types of companies, so it's really hard to make a comparison. But just to give you an idea of what you kind of look at when you do that, right? talks about that, right? Firms with a high ROI, low overall share would likely have a clearly defined focus strategy, probably on the differentiation side because they're looking at bigger margins, right? High overall market share, high ROI firms would likely have a strong position in all segments, be risky but effective when executed properly. Firms in the middle, you know, and this is what we talk about a lot, and this is where, especially in the practice rounds, I'll see a lot of teams that will end up right here in the middle. Again, it's because of not wanting to commit necessarily to a strategy, not wanting to boldly commit to a strategy because you're nervous, right? And so you end up in the middle oftentimes. Well, I just want to see how it goes, and you do that for 2 rounds, and then you find yourself way behind, and it's really hard to catch up. And so that's oftentimes what happens here when we find that we're kind of in the middle, right? We're not really trying to differentiate ourselves. We're not really trying to cut costs. So, and it talks about this. It's not a good sofa, and it's not a good bed, and it's really not a good sofa bed, right? Type of a thing. So. Again, the Boston Consulting Group, you know, they've got some things like this. It's kind of broken down the same way. Now, you can have a low market share, low market growth deal down here, and we got the cow down there, and that's just saying that that's a cash cow, right? Okay. This kind of gets back to, like, let's say you're the high-end differentiator. I said the first few rounds, you might not want to necessarily get rid of your traditional or low-end product. You might want to kind of ride those for a bit, and they will be a cash cow for you, right? You're not getting any market growth. You're not doing anything like that. In fact, you're probably losing market share, but you can still sell a bunch of them and make some cash that can help propel you forward. Now, if you quit making cash, you know, if your margins get too narrow to compete in that segment or whatnot, it might not be worth keeping at that point in time. But for a few rounds, it might well be worth keeping, right, as a cash cow, okay? And then hopefully we get a high star here, which is high market growth and high market share, right? All of the above. Otherwise we can have a dog. If we got over here, we're kind of a question mark. So. Okay, your situation analysis, you have talked about the forces that are at work. So it really runs you through where they're going to be. A lot of people in the past have printed that out. When you get done, I think you can print it out if I'm not mistaken. And I've seen them put them in a 3-ring binder so that they can go back and reference it all the time, because then they know the ideal spot from round to round. Okay, it'll kind of tell you too, and a lot of people can just look at the perceptual map and have an idea where they want their product to be. Okay, so that's kind of up to you. I'm not saying that you absolutely have to do that to be effective, because I've seen people be effective doing it all the different ways. You know, oftentimes. You guys are probably more visual than me, and you look at the perceptual map, you might have a really good idea where you need to be anyhow, right? Okay, overall cost leader. You're going to keep probably all the products, right? So we're going to break down and talk about each of the strategies just briefly, but you're going to keep all the products, right? Okay. More likely it says to reposition products than introduce new ones. So you're not really going to necessarily develop any new products. Developing new products is kind of expensive. It also leads to a lot of interest in your company. You know, every time iPhone comes out with a new iPhone, right? People are lined up. They want to get that. You know, there's just all kinds of excitement. They get all kinds of free publicity about that, right? The overall company. Their iPhone 5 sales probably go up when they introduce a new iPhone 6 because they've just generated more stuff, right? Capacity improvements are unlikely to be undertaken. Okay. In other words, you might want to run overtime instead, and we might talk a little bit about overtime. Automation may be pursued to increase margins. I will tell you that if you're going to be a cost leader and you don't pursue automation, you're probably crazy. Okay. Investments will be financed with debt and or stock issues. What's cheaper, debt or equity? Debt. Okay. For you guys that have had me for classes before, that answer should come automatically, right? Debt's always cheaper than equity. Okay, tend to spend less on promotion and sales. Yeah, maybe. Okay, focus on market share, profits, and stock price. Cost leader with a low tech focus, so a niche. Okay, you're going to multiple product lines in the low tech segment. So what's that mean? That means you might end up having 2 or 3 products in the traditional and or low end. Okay, and part of that can be your high-end product just drifts back into the traditional segment, right? You might even move your performance and size products over where they can get into the traditional, while your traditional product moves back into the low end. So you end up with 2 products in the low end and 3 in the traditional. Okay, kind of depends on how you move your products around and do that kind of stuff, right? You'll invest heavily in automation. You're only competing in 2 segments in that case, right? Okay, you might spend a ton of money to develop your products in those 2 segments. Okay, it might make sense to spend a lot of money on automation. Spend heavily on advertising. Okay, advertising versus sales, folks, right? Okay, investments financed with debt and/or stock issues, same thing, right? Focus on ROS, ROE, and profits. You're all going to focus on ROE and profits, I would hope. So, product life cycle focused on the cost leader, and I kind of talked about this one where your products are kind of drifting back. You're probably going to get rid of the performance and size ones maybe over a little bit of time, but you might be introducing some new products in the high end that are going to drift back, right? And so you're going to, on the perceptual map there, you're going to have 4 or 5 products that are kind of in that straight line where as the product segments move, they're going to encompass your products. So low R&D spending. You don't have to spend a lot of money then, okay? You do have to, you got to pay a little bit of attention because the age of a product is always kind of important. So even though you kind of leave a product right where it's at, you might tweak it a little bit because that makes the age look a little younger. And in certain categories, youthful is important. In the low end, it's not important hardly at all. But in other categories, it's fairly important. And so you might end up tweaking your products a little just to keep them fresh, I guess you would call that, right? Got to invest in automation. High spending on promotion and sales, of course. Okay. Differentiator, broad differentiator. You're going to keep all the products. You're always going to try to be on the front edge. So in the traditional and low end, I shouldn't say you're always going to be on the front edge because there you just want to be towards the ideal spot. And remember, those segments are moving a little slower, and so it's not as big a deal, right? Up here in the high end, you always kind of want to be out there, what I'll call on the cutting edge, right? You're going to want to be out there, right, bumping up against the front edge of those circles, okay? You're going to spend heavily on some advertising. Prices tend to be a little higher. You're a little less worried about price, right? So you're going to get some margins, hopefully, and contribution margins because of that. High-tech focus, again, you might let your low ends then kind of go away. Okay, you're just going to focus on the high end. You're going to be introducing some new products, definitely. Maybe in all 3 of those, high performance and size categories. When I talk about high-end products, that's high performance and size. Okay, when I talk about low-end products, it's usually the traditional and the low end, so you kind of know. Okay. High R&D, you got to keep your products up there on the cutting edge all the time. Okay. And then the product life cycle differentiator. Again, this one I find to be a little bit on the life cycle side a little bit different because as they're moving, you kind of want one product to move from one end to the other, and to me, this one just becomes a little bit difficult to execute. You would certainly, it says multiple product lines and targeted segments, which are your high, traditional, and low. So my guess is those are the areas that you're going to concentrate on, right? And it says high R&D expenditures, though, to continually reposition product lines and keep products fresh. But if it's in a life cycle, you should be letting them kind of drift backwards. So I have to admit this one's a bit confusing for me. Today's shift is tomorrow's nightmare, but poor tactics can undermine a good strategy, certainly. But also good tactics can overcome a poor strategy. I don't know that there is a poor strategy necessarily. I don't know if that's a good quote. But I think that this goes to what I was saying earlier, that pay attention to the game and adjust your tactics to take advantage of opportunities. Okay? And the folks that pay the most attention to the game will be able to most take advantage of those opportunities. Okay? No magic bullet. Okay, each simulation, definitely, I've seen this for 10 years now. Each simulation has a unique competitive dynamic that makes it fun for me because every single semester is different, right? I get to also watch you guys as team members. That's always kind of fun too because sometimes team members get along and sometimes they don't get along so well, and so it's always kind of fun. And you might find that even if you're best buddies, you might get into some good discussions when it comes to the game here and your strategies and tactics and those types of things. And so it's just a game, remember? So don't get really mad at your teammates or anything, right? But successful teams, right? Planning, strategic alignment, that's the nice way of saying, or the politically correct way of saying, boldly pursuing your strategy, right? Teamwork, competitor analysis is key, okay? I can't stress that enough, and like I said, I've been disappointed at times classes in the past where I don't think they've spent enough time really analyzing what's going on, okay, and then making those tactical adjustments. So, okay, I took maybe a smidge more time than what I wanted to on that, so let's go ahead and let's talk about teams while I still got the recorder going. You distance folks, you guys are all going to be on one team, okay? So I think there's 4 that I do have that are doing this in a distance format. So they're going to comprise one team, and so then I want 3 teams here. I guess I can ask this: have you guys self-selected, sort of, kind of, except Valentine? He's kind of Valentine wants to be on his own. I was thinking that between these 2 groups up front here, we could have them draw straws, and whichever one loses would get you then for the. Just kidding. Okay, we'll choose teams here. I'm going to go ahead and shut this off, and then we'll choose teams here locally. But it kind of looks like you guys have self-selected maybe, and that's okay. Other than we got to get Valentine on the team, and so we'll flip a coin or something and see if he wants to be. Probably not. If you guys are a 3-person team, he's going to have to be with one of these 2 groups up here. So, okay.